Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome back to the Zach's Friday Finish Line. I am Ryan McQueeney, an associate stock strategist here at Zach's, along with one of our editors, Maddy Johnson.
Hello, it is Friday, October 12th. It's
spooky season.
It's spooky season.
We're deep in it.
It's also officially fall. It's like fall for real.
Oh, yeah.
It's not like 60 degrees and then it's going to be 80.
Well, it was 80 this week in Chicago for a day.
But now
or
it's
two.
like...
Now it's like 45.
It's 45 and going to be like freezing like overnight.
The weather's real spooky.
Absolutely.
Speaking of spooky.
But we're here to recap this week's biggest stories from the investment and financial world. It's definitely going to be an interesting show today, as it was certainly an interesting week around the global markets as volatility reared its ugly head and gave us all a dose of reality.
Yeah, really speaking of spooky season, it was a spooky week for investors on Wall Street. It's now been basically a whole week of selling, with sluggishness reaching its peak on Wednesday as a combination of many factors, many of which we will get into in this week's episode, caused stocks to suffer their worst trading day in 8 months. And yeah, spooky.
Yeah. Those losses were extended on Thursday with another brutal day, even though a key morning headline looked poised to cool some of the tensions from this week.
Yeah, it was kind of an interesting development on Thursday morning because we got the consumer price index data from September, and it felt like after Wednesday, if the CPI showed any more evidence of inflation starting to ratchet up, then it was going to be Wednesday all over again, if not worse. And then the CPI came in a little bit cooler than expected, but then losses extended anyway on Thursday, so it didn't really seem to make anybody feel more comfortable. But getting into the CPI data, consumer price index in September increased 0.1%, a little bit lower than expectations, a little bit lower than the 0.2% increase we saw in August. Over the last 12 months through September, the CPI was up 2.3%, and that was down from the 2.7% advance we saw in August on that read. As I said, below expectations, and presumably would relax some of the inflation tensions, which were cited as a key cause for concern this week, but didn't necessarily inspire positivity throughout the day on Thursday. It was kind of a soft green early morning trading that was then just plummeted back into the red.
Yeah.
So we'll see if inflation, maybe it wasn't inflation concerns that were causing all the selling. Maddy, as you're going to touch on here, a lot of talk about bonds as well this week.
Yeah, that was definitely another key issue, is the rise in bond yields. So as a general rule of thumb, bond prices fall as interest rates go up. So we could have probably predicted falling prices and rising yields, given that we were in or are in a rising rate environment. So generally speaking, when Brian, that's not talking about Brian. When bond prices fall, stocks will go ahead and follow suit. But this is normally an extended process since it relates to the long-term effect of borrowing costs going up and causing tougher earnings conditions. That said, we saw a much quicker situation go down here, and many believe it's because of the rise in bond yields. It just made stocks seem less attractive in the near term. There's also some currency stuff going on here, which we'll get to later. But clearly, there's a lot of macroeconomic concepts to unpack and consider. One thing we want to note was a bit of wisdom here from Zach's executive vice president, Kevin Matris, who rightfully pointed out that China's pending sale of $3 billion in U.S. bonds is probably going to have an effect as well.
Yeah, definitely.
So bond yields, another issue to consider. That definitely had an effect on Wednesday's and Thursday's sell-offs.
A little economics 101 on this week's episode. As you noted, some currency stuff going on this week, really some currency stuff going on for the past several months. And I think a lot of that has to do with some drama that we've seen in global markets and emerging markets. We talked about the emerging markets crisis a few weeks ago on the show. Certainly been interesting to watch that develop. A lot of headlines in global markets this week that I wanted to touch on. As you mentioned, the situation in China with bond sales is one of a number of stories from around the world that has been weighing on people's minds. Another one that jumps off the page is the Brazilian election. I personally haven't been following that super closely, but
I haven't either.
I think anytime a Brazilian election starts to make news in the U.S., something is going down there, and I think it's like another one of these examples which we've seen all around the world in this growing trend of political uncertainty. Populist, far one direction or the other, leader kind of making some waves as people push back against the parties that be, if you will. So that's what's going down in Brazil. Also in China, I wanted to mention that it was a tough week for the Chinese stock market. Investors returned this week from the Golden Week holidays to one of the country's worst trading days in months. On Monday, the blue chip CSI 300 index tumbled 4.3%, and the Shanghai Composite was down 3.7%. And that volatility came on the same day that China's central bank once again eased its cash reserve requirements for banks. Chinese policymakers are attempting to simulate continued economic growth amid trade war uncertainty, but so far investors are not buying it. Just trying to get more cash into the economy. We're not talking about necessarily a recession in China, but when you're used to rapid growth rates for so many years, a slowdown in that growth rate is a concern. China's been tough all year. One thing I think to consider, and one thing, all credit to Zach's strategist Kevin Cooks. You guys are probably familiar with him if you're a long-time Zach's listener or reader. I had Cook on the free lunch program on Thursday, along with Tracy, to discuss some of the things that are going down on Wednesday and over the past several days. And one thing that Cooker pointed out to me about China is that they're in the midst of a very significant economic transition from this industrial production economy to a more developed consumer economy. I think we've teased that out with some guests that we've had on the show in the past. Some other news stories that we have, the continued development of Alibaba as this new retail thing. That's not the type of transition that just happens without growing pains, without economic uncertainty. And it's not necessarily an unhealthy thing in the long term, especially. So I think, there's still reasons to be optimistic about China and that transition in the long term. But the things I've mentioned, causing a lot of headwinds in the near term. The other global markets headline that I wanted to point out from this week was over in Italy, where hopes that the new populist government, and there's that phrase again, populist government, could settle its dispute with the EU, took a turn for the worse Monday after a bit of a verbal spat between the leaders over there. Italian Deputy Prime Minister Matteo Salvini described European Commission President Jean-Claude Juncker. I'm definitely getting all these names wrong, but Jean-Claude, we'll go with the first name basis, and also Economics Commissioner Pierre Moscovici as, quote, the real enemies of Europe.
Fighting words.
Them's just fighting words. For those who haven't been following along with Italy, again, this kind of counter-establishment populist government was elected. It's a kind of coalition government, so it's populist representatives from both sides form this new government. There was a lot of drama earlier this year about whether they would actually come to terms on the format of the new government and whether they would actually be able to work together, whether there was going to have to be a runoff or a second election or whatever. Did finally come together kind of in like the midnight hour. And then now Italy has been, this new coalition government has been kind of sparring with the EU because the EU has regulations on how big your annual deficits can be. And this new government wants to increase its deficit, spend more on social programs, tackle unemployment, that type of stuff. The EU is saying, that would be not in line with our regulations. They're saying, what are you going to do about it? Come at us, bro. You're the real enemy of Europe. It's a whole mess and a half over there in Italy, taking on, I guess, we've been talking about European countries and economic uncertainty like one at a time over the past several years, it seems like.
Yeah, who's next?
Now it's passed from Greek to Italy now, and who will get the crown next is a great question. But yeah, kind of transitioning from that to another potential problem that we have.
So also weighing on international markets was some tepid commentary out of the International Monetary Fund, the IMF. They said Tuesday that it was lowering estimates for global economic growth in 2018, so this year and next year. So then on Wednesday, the fund expanded on this warning with its full global financial stability form. This report cautioned that escalating trade and geopolitical tensions could trigger corrections in global capital markets and tighter financial conditions around the world. So not great news.
No.
And just like another piece of the puzzle,
piece of the puzzle
that just is like another reason why the markets took a big turn.
This kind of reminds me of what you said earlier when discussing the bond markets, though, in that it probably should have been expected in terms of the rising rate environment. We probably could have predicted that this situation would play out. Spoiler alert. Escalating trade and geopolitical tensions causing headwinds in the global economy. Like, yes, it's not good to see the IMF lower their estimates, obviously, but we've been talking about that all year, right?
Yeah.
I mean, we talk about that every week on the show. So,
pretty much.
IMF getting in on the fun with an official declaration that is not a good thing. All right, we're going to wrap up here with a bit of a sad one. A funeral, if you will.
Yeah.
I wish I could.
The end is nigh.
I wish I had like a soundboard with hearse music and all sorts of gloomy stuff. But the end is nigh, as you say, for Sears of all things.
Well, we knew.
Yeah. Okay. So my dad had worked for Sears or a Sears related entity for many, many years. Is no longer there, but for many, many years he had. And he texted me about this, saying, like, it looks like it's finally over for Sears. And I said, yeah, like, maybe if this happened 4 or 5 years ago, it would be a bit more dramatic. But like you said, it's just kind of finally at this point. Like, nobody even cares anymore because it's been slowly bleeding to death.
You have CEO Eddie Lampert. I mean, years of him trying to restructure the company with all of these efforts to keep the company afloat with selling off assets like Black & Decker, with Kenmore.
Yeah.
Closing underperforming stores.
Yeah.
But like at a certain point, when your shares are trading at 30 cents.
It's a penny stock. It's crazy.
So it's just like, wow. So yeah, but like the Wall Street Journal, I think, reported earlier this week, like they hired this firm, I think M3 Partners, to basically file it like in imminent bankruptcy filing.
Yeah.
It like you're like, oh, okay, it's coming. We still don't know when. Like it hasn't really like.
There's nothing officially.
It's not officially
declared,
but we're all like, okay, like it's okay when
the big deadline / maybe last final moment will be Monday. It has a $134 million bill of debt due on Monday.
Yikes! I think my student loan bill is that total, but like
I could pitch in about $5 on that if we want to get a GoFundMe started. But as you mentioned, these stories have been kind of leaking out slowly all week. So the Monday deadline for that debt is coming, looming very large. Earlier this week, through a Reuters report, we learned that 3 companies that sell items to Sears are saying they didn't pay us, which is a good sign that they're running low on cash. And as you described, CEO and also primary shareholder Eddie Lampert has over the past several years now been bailing out the company by loaning it money through his own hedge fund, so kind of writing checks to
Oh, that's
himself.
right.
He's apparently not doing that anymore. No more of that coming. That's not what's going to be making the Monday payment. And so then we look to see if Sears has enough cash to cover that payment. And no would be no would be the presumed answer here. The most up-to-date filing we have in terms of their cash position was August 4th, which was several months ago, first of all, and had them at about $193 million of cash on hand at that period. And then according to some figures from mid-September, it had about $269 million available to it from lenders. So all things said and done, about a month ago, it maybe could have made that last payment if, when I say last, that's the upcoming payment that's due on Monday.
Right.
It's still in a heck of a ton of debt, obviously. Maybe could have made that payment if it expended like most of the cash it had on hand at the end of August. We don't know necessarily exactly where that cash position is now. So that's why I think, the end is very, very
I mean, its
nigh.
last profitable year was 2010.
Oh, man.
And I was
Yikes.
reading something that I think it was on CNBC that some analysts were estimating that it would need to bring in or generate $1 billion in sales a year in order for it to stay afloat.
Oh, yeah. Okay.
Right.
Easy
For
peasy,
any
right?
other company
Yeah.
of its size, that would be right a no-brainer. But for Sears, no.
So
It's at this point for them, that's just not doable.
one thing I wanted to just kind of lament about for a little bit is the legacy. I see myself already coming up with some title along the lines of Death of an American Icon for this episode.
100%. Sears is an iconic retailer.
Founded in 1892. That's a really long time ago.
It's like one of the original department stores. I mean, that catalog. I mean,
Yeah.
who didn't?
So the catalog, which is very famous, kind of what escalated them into the American icon status that we're referencing right now. The catalog that very famously you could buy homes in for a really long time, which was kind of this really interesting concept that Sears was famous for. It actually ended its general merchandise catalog all the way back in 1993 was the last general merchandise catalog. Catalogs aren't really a thing anymore in like today's day and age that I can think of. I don't get any anymore.
Okay, I still get some. Like Anthropology still has a great catalog.
Yeah.
J. Crew still has a great catalog. Pottery Barn, West Elm.
All stores that are just so much more fun and relevant than Sears is these days, right?
Yeah. More relevant companies still have awesome catalogs. I don't necessarily shop or order from them. It's just more, you get ideas, like consumers to get ideas from the catalogs, and then you either go to the store or there you go online. You're like, ooh, because then you look at the model, like it's basically how you're modeling the merchandise. Yeah.
So the online thing is a great point though, because it just really felt like Sears never cropped up in this gang of retailers that was able to do anything new or exciting online, or care much about it. And if they did, they were probably too late to the game, unfortunately.
I think that's the major thing, is they were just too late.
Yeah. But even, think about ending the general merchandising catalog back in 1993 because sales were declining from it too much. That kind of writing on the wall all the way back when, this really has been a very, very slow bleed out for Sears, and it's kind of sad. I mean, when was the last time you were in a Sears store? Do you remember? I know vividly when the last time I was.
I don't. I know the last time I was in a JCPenney because the local mall in Rockford,
Mm-hmm.
there's a Sephora in there. So I would park outside of the JCPenney when I go to visit my parents.
Yeah.
I'm like, oh, I need to go to Sephora.
Well,
So
that's
then I would go
that's
in
a
there.
great point. I'm glad you brought that up because the JCPenney Sephora thing has been, one of the few things we're saying this is what's keeping JCPenney around. Cue all the is JCPenney next takes as soon as the Sears bankruptcy actually happens, by the way. But, that's an interesting thing that gets you into the JCPenney is there's Sephora in there. And Sears, as you already mentioned, kind of just slowly over the years shed the interesting things that gets you going into Sears, like Black & Decker,
Yeah.
Kenmore. Those were Sears exclusives
Just
for
to,
so long.
Pay down debt.
Yeah, and then they're no longer, and then so they have to shed them because they're running out of money, and then they don't have them exclusively anymore. So
Yeah.
there's less of a reason to go in the stores, so they make less money. It's a whole vicious cycle that really has led to this slow bleed, as I'm calling it. But while we're on the topic of Sears, I do want to mention one more thing we can do some ridiculous speculation about if you want to, because I know we love a nice
Go for it.
ridiculous speculation. There was a spinoff. Let me see when the spinoff happened. It looks like 2012. The official spinoff happened of what are called Sears Hometown stores. The spinoff itself is called Sears Hometown and Outlet Stores. It operates as a separate entity now, as one does with a spinoff. It trades under the ticker SHOS. The hometown, I'm not exactly sure what the outlet stores look like. The hometown stores look like I don't know. Where I grew up, there was a couple of like local Ace Hardwares where someone from the neighborhood like owned the Ace Hardware, and it was like a little
It's like an Ace franchise.
The Sears hometown stores are that, but they're instead of Ace Hardware, it's Sears. They're in really, really small areas, really, really rural areas. They sell appliances, farm equipment, lawn equipment, that type of stuff.
Okay.
Hanging on by a thread, it's actually has a larger market cap and higher share price than Sears does right now. And, hypothetically, this would be able to continue operating even if the other Sears entity, Sears Holdings, goes bankrupt. So my question is, could a Sears hometown type of thing exist long-term without Sears? And could maybe someone be interested in taking over a company like that has a presence in rural America?
So I feel like Eddie Lampert is already like figuring out what to do post the bankruptcy. Like he already is like, rubbing his fingers, rubbing his hands together, like making a plan, like post bankruptcy, post liquidation, and already like spinning it towards potential investors. Like, oh, like look at Sears hometown stores and look what they're doing. Like, even if it's pitching it to whoever's the CEO of hometown, which I'm not actually sure. Oh, it is. Wait, I'm sorry.
They did $1.72 billion in revenue last year, which is interesting.
Yeah. I mean, that's a lot.
Yeah, it's not nothing, right?
It's not nothing.
Yeah.
So with Eddie Lampert is just kind of, I feel like at this point, throwing, stuff at the wall and just seeing what sticks.
Yeah. Well, that's what happens when you write yourself checks for years and years and years. Okay. Eddie Lampert, what an interesting legacy he is going to have now after this whole debacle.
And that's like, I mean, interesting, but like not a bad thing, but just like truly interesting.
Yeah. Yeah. I mean, we're saying
bad and good, but like just like something to really like analyze and like in business school.
Yeah, definitely. And I'm sure that they analyze the guy who drove the Titanic in ship sailing school as well. But
wow.
Interesting legacy he surely has. Anyway, that was uncalled for by me.
Great
Sorry,
metaphor.
Eddie, who I'm sure listens to this. Anyway, that's it, I think, for us this week. A spooky episode, spooky things happening at Sears, spooky things all over in Wall Street. Thank you guys so much for joining us. As always, shoot us an email at podcast@zax.com. Let me know what you're going to be for Halloween. Let me know if you want us to cover something else on the show, or if we've got anything wrong, maybe, whatever you want to do. You can also check out all of our other exclusive audio content at zax.com/podcasts. Always remember to subscribe and leave us a rating on Apple Podcasts. It's really helpful. Check us out on Spotify, SoundCloud, Stitcher, basically everywhere that you can get a podcast. Thank you so much for joining us. We will see you next time on the Zax Friday Finish Line.